Silver has done it again, another all-time high. Let's break down what just happened and what it could mean going forward. What an incredible day for precious metals overall. Gold also reached a record high, but silver is absolutely on fire. As of moments before the market closed for the week, silver was the second best performing metal, narrowly trailing platinum. Silver is up 2.62% on the day, sitting just 25 cents below the next major level at $67.50. That a $1.72 gain, putting prices at $67.25, and even the bid price remains comfortably elevated. This move has pushed the gold-to-silver ratio below 65, now sitting at 64.62. Truly an impressive performance. Sometimes it's worth pausing to appreciate days like this. Silver's run has been nothing short of remarkable. While pullbacks are inevitable, many believe the broader uptrend remains intact. It wouldn't be surprising to see silver touch $70 before year-end. What a day it's been. Much of this rally is being driven by a combination of structural supply-demand imbalances and familiar macroeconomic forces. Industrial demand remains robust, and broader economic conditions continue to support precious metals. I want to reference a recent Bloomberg article that shed some light on the situation, though there's clearly more happening beneath the surface. Recent data showed the U.S. Core Consumer Price Index rising at its slowest pace since early 2021, strengthening the case for lower borrowing costs, a positive backdrop for non-yielding assets like gold and silver. However, the inflation data was clouded by a 6-week government shutdown that only ended last month. Meanwhile, after delivering its third consecutive rate cut, the Federal Reserve has remained vague about the future pace of easing. According to the FedWatch tool, there's currently just a 22.1% chance of another quarter-point cut at the January 2026 meeting. So the current price surge isn't being driven by immediate rate expectations, but perhaps by anticipation of future policy shifts under new Fed leadership. Geopolitical tensions are also playing a role. Developments involving Venezuela have boosted the appeal of safe haven assets, particularly after the U.S. ordered a blockade of sanctioned oil tankers and expanded its military presence in the region, the largest such buildup in the Western Hemisphere's history. Precious metals have been on a blistering rally this year, with silver up roughly 130%. That's extraordinary. Underpinning this move are fundamental supply issues. Global silver mining output has been largely stagnant for years, increasing only marginally and nowhere near enough to meet demand. Roughly 90 million ounces have reportedly left COMEX vaults recently, forcing buyers, particularly in China, to secure silver at elevated premiums. This has helped create arbitrage opportunities, with silver trading near $68 per ounce in Shanghai. While COMEX isn't facing the same depletion fears seen at other exchanges, silver has been moving aggressively in response to tariff uncertainty following earlier policy announcements. Although gold and silver ultimately avoided tariffs, the initial threat disrupted market balances, tightening supply and widening premiums on physical bars, rounds, and coins. These pressures, even if temporary, are very real. Finally, industrial demand continues to surge. Silver's critical role in green energy and advanced technology, particularly in photovoltaics, electric vehicles, electronics, and AI infrastructure, remains a powerful driver. Much of this demand is relatively recession-resistant, reinforcing silver's long-term fundamentals. In short, today's move isn't just hype. It's the result of deep, structural forces converging all at once. We know that solar energy accounts for a significant portion of silver demand. On average, about 20 grams of silver are used in every solar panel. You've heard me talk about that before. While newer technologies may require even more silver, there's also discussion about future innovations that could reduce silver usage or introduce alternatives. Personally, I think that's still a long way off. China, for example, has overproduced solar panels, and some units manufactured years ago are only now reaching the market. That's another important factor to consider, especially as cooling U.S. inflation, rising unemployment, and expectations of future Federal Reserve rate cuts are making silver and gold increasingly attractive as non-yielding assets in a low-rate environment. Yes, some employment data has been mixed, but much of what we're seeing right now is driven by market psychology. At the same time, supply and demand dynamics are becoming more influential, helping propel silver's price higher. It's been impressive to watch silver hold its ground. Trading volume has also been relatively strong, particularly earlier in the session, typically around 9 to 10 a.m. We did see an attempted smackdown early on, as silver surged around $66.70 before being pushed sharply lower on heavy volume, briefly dropping to about $64. But that didn't last long. Buying interest returned volume picked up again, and silver surged back, reaching a high near $67.50. As is typical, trading volume tapered off after about 1 p.m., then picked up again later in the afternoon, around 3:30 to 4 o'clock, leading to another price spike. This late session move looked like an attempt to reclaim momentum and possibly challenge a new all-time high. While it doesn't appear that will happen with only moments left before the market close, today's performance was still remarkable. What makes it even more notable is the timing. We're heading into holiday season, with Christmas next week, a period that's usually quiet for markets. I've even heard talk that the day before Christmas Eve and the day after Boxing Day could become federal holidays in the future, which would further reduce trading activity. Whether that happens this year or next, the point remains, this is typically a slow period. Yet silver continues to surprise us. At the moment, silver is up about $1.70 on the day, but what really stands out is the full intraday swing. Nearly a $3 move from the lows after the smackdown of the highs on the rebound. If we were to see another $3 move to the upside in the coming days, silver would already be at or above $1.70. That's how quickly this market is moving. It's an exciting time. It's also worth stepping back and appreciating what silver has done this year. A roughly 130% gain is extraordinary, and I don't believe the story is over. I'll be talking more about that in a future video. Long term, I firmly believe silver plays an important role in preserving wealth. Whether you buy now or wait for the next major dip, whenever that may be, I think silver will continue to do what it has done for thousands of years. Whenever prices spike like this, I always encourage people to look beyond price alone. And I'd say the same thing if prices were falling sharply. There's more to silver than its daily price movements. While silver has undeniably been a great investment this year, that kind of performance is unusual and driven by unique circumstances. The more we understand that, the better position we are. No matter what, I believe everyone should have a core silver stack. And once you have it, hold on to it with a diamond grip. That means staying disciplined through both calm and turbulent markets. Let me know your thoughts in the comments below. I hope you found this video informative, insightful, and educational. Thank you so much as we celebrate yet another all-time high for silver. And please don't forget to rate, share, comment, and subscribe.